Hello and welcome to Business Incorporated. I'm Imana Amawe. On the show today, Nigeria's central bank begins its first rate-setting meeting for the year. And as all roads lead to Davos, Oxfam says global inequality continues to rise. Plus, Zimbabwe's economy struggles to adjust as prices spike and fuel shortages bite. Welcome once again. Well, first of all, let's take a look at the markets. We begin here in Nigeria as the Monetary Policy Committee of the Central Bank begins its first rate decision meeting for the year. The meeting, which commenced today, will last until tomorrow, Tuesday, January the 22nd. Market analysts are of the view that the current rates will be retained in spite of concerns over the 2 months of rising inflation figures. The MPC had maintained the monetary policy rate at 14% at its last meeting in November 2018. The central bank has kept the policy rate at the current level since July 2016, citing concerns over the fragile state of Nigeria's economy. Now, most of the markets we track here in Africa were all in green territory at intraday, except the Nigerian stock market. And Egypt's EGX was up at 0.88%, while the South Africa's exchange JSE was also up at 0.53% as at intraday. However, the local equities market saw its index down at 0.50% at intraday. Kenya closed positive. That was on Friday. And over in the Middle East, the stocks were mostly down at intraday, with the Dubai index taking the hardest hit, down at 0.56%. The Abu Dhabi index also trended lower at 0.90%, while the Qatar index shed 0.35%. And Saudi Arabia's index was trending higher at 0.06%. Over in Europe, stocks were lower in early trade after fresh data from China showed its economy grew at its slowest pace since 1990, though it matched expectations from analysts. For more from the European scene, we'll bring in our colleague in Frankfurt, Conrad Bussen, to tell us more. Hello, Conrad. Now,
good afternoon. Thanks for having me back on Channels TV.
It's good to have you back indeed. Well, China's economic growth last year was the slowest in decades, according to analysts, with the annual GDP data matching levels seen in 2009 during its global economic crisis. How are the markets in Europe reacting to this, and which sectors are the worst hit?
Well, I can tell you that the biggest DAX loser, the DAX being, of course, the German share index, and the biggest loser of the German blue chip shares today is Henkel. The shares are down nearly 9% today. You know, Henkel, the company, you might know it in Nigeria as well. It produces lots of different products. Loctite adhesives, for example, or also Schwarzkopf shampoo, Dial soap, also Purex laundry detergent, many different products from many different brands. Henkel is very active in many different markets of this world, and today Henkel announced that revenue growth this year is likely to be flat. It's only expected to grow between 2% and 4%, which is much, much lower than what Henkel had predicted so far. China is not explicitly mentioned in this lower outlook by Henkel, but everyone knows that China is a very important market for Henkel, a market that the company had been hoping for a lot. So, of course, the news that the economy in China has slowed down so significantly in 2018 is sort of accelerating the negative trend and the negative momentum of Henkel's shares today, which was triggered, of course, by this lower outlook. Apart from this, in terms of other industries, you know, the usual suspects when we talk about exporters here in Germany, the German car makers, their shares are holding up pretty well, I have to say, despite the negative news from China.
Indeed, Conrad. It seems on a broader note, the market handled the reaction quite impressively of the weak growth in China. What would you say is the reason behind this? And are market watchers expecting the slow growth in China to ease a bit?
Yes, they do, because they also expect the Chinese government to do something about this slowdown. And the government in Beijing already has announced a few measures. More stimulus can be expected for the Chinese economy, for Chinese businesses. And it's really important to note here that unlike during the last global financial crisis, where the government in Beijing took a lot of money and put it into large infrastructure programs, it gave a lot of money to large state-owned companies. Now this time it's the private sector that is going to benefit from more generous credit conditions. And this is important to note, because this is giving hope to many people on the markets that, the renewed stimulus by the Beijing government is not likely to increase the credit bubble that, many pundits have talked about for such a long time in terms of at least parts of the Chinese economy. No further credit bubble, but still new stimulus. This is what many investors are putting their hopes on right now. So for the moment, the slowdown is there. It's also expected to last for a couple of months, but it's not going to last forever.
Well, it's a new week and all roads lead to Davos this week for the World Economic Forum, with a few heads of state, including Angela Merkel, and hundreds of company CEOs gathering to discuss the future. From what you're hearing, what's the focus there?
Well, in the run-up of the Davos meeting, a lot of institutions are coming out with different kinds of surveys that point to topics that might be important at this year's meeting. And if you talk to traders on the trading floors, they mentioned to me two surveys sticking out today. And number one is the Oxfam report that, the rich of this world are getting richer and richer and the poor are getting poorer. 26 of the richest people in this world now own as much as the poorest 50%. And I say that again, 26 of the world's richest billionaires own as many assets as 3.8 billion people in the world who make up for the poorer half of the population. The continuing spread between rich and poor in this world is going to be a very important topic at this meeting in Davos. And survey number two is the Edelman Trust Barometer, which shows that only 1 in 5 people believe worldwide that the economic, political and social system in their country is working for them. So another topic will, of course, the growing distrust of people in governments. And the populist answer, of course. Let me remind you that not only Angela Merkel, a very populist government leader, will join, the ranks in Davos, but also Jair Bolsonaro, a very populist man, the new president of Brazil. So what's going to be discussed is how to tackle the ongoing inequalities in the world without following populist recipes. That is going to be very much discussed by people here in Frankfurt when they, look at what will be coming out of Davos this week.
All right, thank you very much, Conrad, there for us in Frankfurt, for joining us on the program.